Before we invented money, we invented something even more powerful: belief. Picture this. You're a farmer in ancient Mesopotamia around 3000 BC. You've just harvested your barley, but there's a problem. You can't eat all of it before it rots. You can't guard it from thieves while you sleep. And you definitely can't carry it with you everywhere you go. So you do something that seems completely insane by modern standards. You take your entire harvest, your family's survival for the year, and you give it to the local temple. Not because you're particularly religious, not because the priests asked nicely, but because of something far more practical. Everyone else is doing it too. And here's the truly wild part. This wasn't charity. This was banking, the world's first banking system. And it ran entirely on faith. Let me explain how this actually worked, because it's way more interesting than you'd think. The temple doesn't just take your barley and thank you. They give you something in return, a clay tablet with markings that say, this person deposited 50 bushels of barley. That tablet? That's your receipt, your proof, your ancient checking account statement. Now you can walk away with just this small clay tablet instead of guarding mountains of grain. And here's where it gets really interesting. You can take that tablet into any merchant in the city and they'll accept it as payment, because they know they can take that tablet back to the temple later and withdraw actual barley. Sound familiar? It should. This is exactly how modern banks work. You deposit money, they give you a record, you use that record to make transactions. The only difference is we use digital accounts instead of clay tablets. But here's the question that should be blowing your mind right now. Why did this work? Think about it. You're handing over everything you own to a building full of priests you've maybe never met. There's no police force to call if they steal it. No insurance, no government backing, no FDIC protection, nothing. The entire system runs on one thing: belief. You believe the temple will keep your grain safe. You believe they'll give it back when you ask. You believe other people will accept your clay tablet as payment. And most importantly, everyone else believes the same thing. This is the secret that nobody teaches you about money. Money has never been about the physical object. It's always been about collective belief. The temples figured this out thousands of years before economists had a word for it. But why temples specifically? Why not just store your grain in your own house? This is where things get really smart. Temples had something nobody else had: divine backing. See, if you stored your grain at your neighbour's house and he stole it, that's just theft. Bad, sure, but it's a human problem with human consequences. Maybe you beat him up. Maybe you demand compensation. Maybe nothing happens at all. But if you stored your grain at the temple and the priests stole it, that's not just theft, that's sacrilege. The gods themselves would be angry. And in a world where everyone genuinely believes the gods can strike you dead, send plagues or ruin your harvest, that's a powerful deterrent. The priests weren't just protected by social pressure. They were protected by cosmic fear. Nobody wanted to be the person who pissed off the gods by stealing from their house. This gave temples something modern. Banks spend billions trying to create: trust. And once you have trust, you can do some really interesting things. The temples didn't just store grain, they started lending it out. Here's how that worked. Let's say you're a merchant who wants to fund a trading expedition. You need grain to feed your workers for 3 months, but you don't have grain. You have the promise of future profits. So you go to the temple and say, lend me 100 bushels of grain. When I get back from my trading trip, I'll return 110 bushels. The temple looks at your track record, decides you're trustworthy, and gives you the grain. They write it down on a tablet. Loan of 100 bushels. Repayment of 110 bushels, due in 3 months. Congratulations, you just invented interest rates. But here's what makes this absolutely genius. The temple isn't actually lending out the grain you deposited. Your grain is still sitting there in the storehouse, ready for you to withdraw whenever you want. Instead, they're lending out someone else's grain, or maybe grain that hasn't even been deposited yet, but they know will be deposited soon because harvest season is coming. This is fractional reserve banking, the same system every modern bank uses, the same system that causes financial crises when it goes wrong. And it was invented by priests in ancient temples thousands of years ago. The temples realised something profound. As long as everyone doesn't demand their deposits back at the same time, they can lend out way more than they actually have stored. This created something that didn't exist before: economic growth. Before temples, your grain was your grain. it sat in storage. It didn't create anything. It didn't grow anything. It was just there. But when temples started lending it out, suddenly your stored grain was funding trading expeditions, building projects, new businesses. The economy expanded because the same grain was effectively being used by multiple people at once. Your grain was still available for you to withdraw, but it was also being used by someone else to create new wealth. Everyone benefited, as long as everyone kept believing in the system. This is where we need to talk about what happened when that belief broke down. Because it did break down, multiple times throughout history. Imagine this scenario. Rumours start spreading that the temple doesn't actually have all the grain it claims to have. Maybe a priest was caught stealing. Maybe there was a bad harvest and the temple lent out too much. Whatever the reason, people start to worry. So one person goes to withdraw their grain, just to check, just to make sure it's still there. The temple gives it to them, no problem. But now other people see someone withdrawing their grain and they think, maybe I should check on mine too. So they go withdraw theirs. The temple handles this too, still no problem. But word spreads, more people start withdrawing, and the temple has to start calling in loans to get more grain. They tell merchants, sorry, we need that grain back now, not in 3 months. Those merchants can't pay. They haven't completed their trading trips yet. They don't have the grain to return. The temple starts running out. People at the back of the line don't get their grain. Panic spreads. This is a bank run. The exact same thing that caused the Great Depression. The exact same thing that happens in modern financial crises. And it was happening in ancient Sumeria. The difference is how they solved it. Modern banks have government insurance, legal frameworks, central bank backing. Ancient temples had something simpler and arguably more powerful: religious authority. When a bank run started, the priests would make a public ceremony. They'd perform rituals. They'd make offerings to the gods. They'd swear sacred oaths that the grain was safe. And the gods guaranteed everyone would get their deposits back. And because people genuinely believed the priests had divine backing, this often worked. The panic would calm. People would stop withdrawing. The crisis would pass. Faith literally held the financial system together. This gets even more interesting when you look at ancient Egypt. The Egyptian temples took this entire system and scaled it up to run an entire civilization. The pharaoh's granaries weren't just storage facilities. They were the central bank of Egypt. During good harvest years, they collected grain as taxes. During bad years, they distributed it to prevent famine. But here's what's crazy. The priests running these granaries kept incredibly detailed records. We're talking accounting systems that rival modern bookkeeping. They tracked every bushel of grain coming in, every bushel going out, every loan made, every repayment received. Why? Because they believed the gods were watching. The gods cared about honest accounting. Keeping accurate records wasn't just good business practice, it was a religious duty. This created a system of accountability that didn't exist anywhere else in the ancient world. The religious aspect made financial corruption not just illegal, but spiritually dangerous. Think about how backwards this seems. We usually think of religion and finance as opposites. Religion is about faith and spirituality. Finance is about cold, hard calculation. But in the ancient world, they were the same thing. The priests were the bankers, the temples were the banks, and financial transactions had religious significance. This actually makes a weird kind of sense when you think about it. Both religion and finance require the same fundamental thing: belief in something you can't see. You can't see God. You can't see the intrinsic value of money. Both require you to trust in an abstract system. Both require collective agreement that something intangible is real and important. The ancient priests understood this better than we do today. They knew that money, at its core, is just a story we tell ourselves, a shared fiction we all agree to believe in. The clay tablet representing your grain deposit, that's a story. The promise that you can withdraw your grain anytime, that's a story. The belief that others will accept your tablet as payment, that's a story. But here's the thing about stories. When everyone believes them, they become real. They have real power. They shape real behaviour. They create real consequences. This is why ancient financial systems were so closely tied to religion. The gods weren't just a nice add-on to the banking system. They were the foundation of it. They provided the collective belief that made the entire system work. Without religious backing, ancient banking would have been impossible. Nobody would have trusted the system enough to participate. It would have collapsed immediately. Fast forward to ancient Greece and Rome, and you see this system evolving but keeping the same core principles. Greek temples became famous for their banking services: the Temple of Apollo at Delphi, the Temple of Artemis at Ephesus. These weren't just religious sites, they were financial centres. International banks handling deposits from all over the Mediterranean. Wealthy people would deposit money in temples specifically because they were considered safer than any secular institution. Even invading armies usually respected temple sanctity. Robbing a temple was asking for divine punishment, and even the most hardened generals thought twice about that. Roman temples did the same thing. Julius Caesar famously raided temple treasuries to fund his military campaigns, and it caused massive scandals. Not because it was illegal in the modern sense, but because it violated religious law. It was sacrilege. The interesting thing is that as Rome became more secular, trust in temple banking started to decline. People developed alternative financial institutions, private banks, money changers, professional lenders. But these secular banks faced a problem the temples never did. How do you get people to trust you when you can't claim divine backing? The Romans solved this through law and reputation. Instead of "the gods guarantee this," it became "the state guarantees this," or "my family's honour guarantees this." It worked, kind of. But notice what happened. The guarantee changed, but the need for a guarantee didn't go away. Financial systems always require belief in something beyond the immediate transaction. This pattern repeats throughout history. Medieval Christian monasteries became banking centres. Islamic waqfs served similar functions in Muslim societies. Buddhist temples in Asia managed community wealth. Different religions, different continents, different time periods. Same basic system. Temples and religious institutions serving as trusted financial intermediaries because they provided something secular institutions couldn't: spiritual accountability. Here's where this story gets really relevant to today. We like to think we've moved beyond all this. We're modern, we're rational, we're scientific. Our financial system is based on math and economics, not superstition and faith. Except that's not actually true. What backs the US dollar? The full faith and credit of the United States government. Faith. It's right there in the phrase. The dollar has value because we collectively believe it has value. Because we trust the government. Because we have faith in the system. What happens when that faith breaks down? Financial crisis. Bank runs. Market crashes. The exact same thing that happened in ancient Sumeria when people lost faith in the temple system. The 2008 financial crisis wasn't caused by a lack of money. Money is just paper and digital records. It was caused by a loss of faith. People stopped believing that mortgage-backed securities were safe. That trust broke down. The system seized up. And how did governments respond? By making public statements, by guaranteeing deposits, by performing economic rituals called quantitative easing and stimulus packages, by trying to restore faith in the system. The tools are more sophisticated than ancient temple ceremonies, but the underlying dynamic is identical. Financial systems run on collective belief, and when that belief falters, you need to restore it somehow. This is the secret the ancient priests understood that we keep forgetting. Money is not a thing. Money is a belief system. Currency is not value. Currency is a representation of trust. The temples worked because they provided a framework for that trust. The gods were watching. The priests were accountable to higher powers. The system had spiritual stakes that made cheating unbearably dangerous. Modern banks try to recreate this through regulation, insurance, and legal frameworks. But it's the same game. We're still trying to create systems that people will trust enough to participate in, even though those systems are fundamentally based on collective fiction. Think about crypto for a second. Why do people believe Bitcoin has value? There's no government backing it, no company guaranteeing it, no physical commodity behind it. People believe in it because other people believe in it. It's pure collective faith, which makes it, in a weird way, the most honest form of money. It doesn't pretend to be backed by anything except belief. The crypto enthusiasts talk about trustless systems, but that's backwards. Crypto still requires trust. You have to trust the blockchain, trust the code, trust that enough other people will continue believing in the system for it to remain functional. Same as always, same as the clay tablets in ancient Sumeria. Different technology, same fundamental principle. So what's the takeaway from all this? Money has always been about faith. The temples weren't using religion to trick people into a financial system. They were acknowledging what money actually is, a collective belief that requires trust to function. The priests didn't invent this. They just recognized it and built systems around it. They understood that if you're going to ask people to believe in an abstract system, you better give them a good reason to believe. And for most of human history, the best reason was divine backing. We've replaced gods with governments and algorithms, but we haven't changed the fundamental equation. We still need reasons to believe. We still need trust. We still need faith that the system will work tomorrow the way it worked today. The ancient temples proved something that's still true. The economy runs on belief. Not gold, not grain, not paper, not even digital code. Belief. When belief is strong, economies boom. When belief fails, economies crash. This was true in ancient Mesopotamia. It was true in Rome. It was true in 2008. It will be true tomorrow. The first bankers were priests because they understood something we keep forgetting. Before you can exchange value, you have to agree on what has value. And that agreement is always, fundamentally, an act of faith. So the next time someone tells you the economy is based on hard facts and rational calculation, remember the clay tablets in ancient temples. Remember that the entire global financial system runs on the same thing it always has, our collective willingness to believe in a story. And maybe ask yourself, what story are we believing in today? And who are the new priests telling us to have faith?